let's just start with an open one. How you expect the sanctions that have been announced to shape the flows of commodities out of Russia into the rest of the world?
I think, as Javier said, there will be some self-sanctioning. So, we can already see the Urals is trading at very large discounts, and there's no visibility on how the sanctions will evolve. So even though for now the sanctions are not targeting energy export, that could change over time. So there's some fear from anybody to buy Russian oil at the moment. But I would say that prices are not going to be only dependent on that. But I can answer that later.
No, please do. What do you think they'll be dependent on?
Okay. Well, first, before the Russian invasion of Ukraine, the market was already very bullish, and I expected to see much higher prices than today. So I think a large part of the rally is not only due to the Russian invasion of Ukraine, and the main fundamentals are that already inventories are very low, there's very little spare capacity, there's very little expected supply growth, and there's a high expected demand growth due to the recovery of COVID. So already just that, should justify much higher prices than today. Then the Russian invasion, changes, could change potentially a lot of things, but we don't know yet how it's going to pan out. Things could get better soon as things could, get much worse over the long term. So I don't think oil prices are only going to be dependent on the amount of Russian oil we lose over the next few months. I think there's a lot to it. There's if Putin stays in power and carries on the tensions, and there's no de-escalation, the sanctions will stay. That will impact Russian production in a big way. That will eventually impact Russian exports as well, and that will also impact an acceleration towards alternative energies, towards the energy transition over time. So there's a lot of factors at play. It's not only about how much oil production we will lose from Russia today.
Well, decarbonisation was at the epicenter of your thesis. When I look at some of the fund's performance for you, Pierre, I saw one up more than 100% in 2020. In 2021, I think up more than 30%. I'm wondering now, Pierre, and I'd love your view on it, whether this shift to decarbonisation accelerates or reverses because of what we're seeing play out. I hear the likes of the Italians talking up coal again. The Polish looking at maybe doing something as well. I just wonder from your perspective, do you think it accelerates it or reverses it?
No, it has to accelerate, because so far we did some work on reducing the supply, but not on reducing the demand. So I think we'll have to do a lot more work on reducing fossil fuel demand alongside supply. So the supply should actually go down after the demand, obviously, so that we don't have price shock and we don't give more power to countries like Russia.
Russia has the power, seemingly right now, because everybody wants a carve
yes, out. But I think they think they have more power than I think they really have. I think there's room, if needed, to put sanctions on Russian oil exports. Russia is exporting 6.5 million barrels a day. About 2 to 2.5 million barrels a day going to China. So that leaves 4 million barrels a day going to Europe or the US. If we were to sanction that, I'm sure that 1 million barrels a day of it would go to China, so which means that we'll probably lose 3 million barrels a day of supply. This is an amount that the world can afford to lose to some extent. If we lose that supply, the Gulf countries would probably increase production by 1.5 million barrels a day, and then we'll probably need to reduce to take some oil from the IEA emergency reserve, so the global SPR, at the rate of 1.5 million barrels a day, and that's without losing some demand due to higher prices. So
yeah, that's
I
a
think
slightly controversial view. Can I just jump in and pin you down on that?
Sure.
You think that Europe could move on without Russian gas, without Russian crude?
No, Russian oil. Russian
oil specifically.
Russian gas. Russian oil, I don't think is too much of an issue. And Russia is getting 5 times more revenues from oil than gas. So I don't really see too much of an issue. At the end of the day, there's a lot at stake here, right? We're speaking about potentially World War III starting, and that needs to be stopped as soon as possible. Obviously, there will be cost, but there will be less cost trying to stop it early than trying to stop it late, right? There will be less human cost and economic cost in trying to stop Russia right away and show that we're serious and that we're willing to take a cost. There's one reason why Putin thinks he has the power and is kind of bullying the world, is because he thinks we are not ready to take any economic cost. But we are speaking about a war on the free world. It's not, it's not a small thing, right?
Yeah.
There will be cost to it.
No, I hear you. Goldman Sachs think that the only remaining balancing mechanism left in the commodity market, crude specifically, Pierre, and I'd like your opinion on this, is demand destruction. That ultimately crude prices go higher from here, but that kills demand, and that's how we're going to balance this market. Do you agree with that?
Yeah, I mean, I agreed with that even before the Russian invasion, right? I think we have to take oil. I mean, why now? As I said earlier, we have low spare capacity, we have low level of inventory, we have low supply growth and still high demand growth. So we should bring that demand growth back down. We have to take it as something that's a bit more of a luxurious product and not a birthright. You don't want to, this oil to actually, support autocratic regimes around the world.
I know you've got really strong views on the SPR release as well. Pierre, you've seen the headlines. I've seen the headlines this morning.
Yeah, I mean,
we made this effort at the end of last year. Seemingly, we're doing it again. Do you think it moves the dial at all?
I mean, I think it needs to be done for the right reason. I mean, using SPR to try, to bring prices down is a no-go. Like we're at the beginning of a multi-year deficit. So if you start using the SPR early in the multi-year deficit, is shooting yourself in the foot. You need to keep that for the right reasons. And I think the SPR has always been there to bring more supply when we have large supply disruptions due to geopolitical shocks. And that's probably what we will have over the next few months or years. So the SPR should be kept for those events, not to manipulate prices, but and that the way it was always used in the past is using SPR due to large supply disruptions from a large producing country. And I think it needs to be used for the right reason.